Now, it's not every day you get to interview your father. In today's episode, we sit down with Zad Siadatan to discuss his early life and introduction to the industry, to property cycles and property investing versus trading. As someone who has predicted the last 2 recessions to the month, we got his passionate insight into the current property market, whether to buy and when the next crash will be. At this stage in his career, he says it's all about giving knowledge and helping the young entrepreneurs. I've had the blessing of having him as a mentor since I joined the industry, and now others can find guidance to creating timeless wealth. Don't forget to like and subscribe to show your support for the channel. I hope you enjoy it. I've been looking forward to our next guest. He is an entrepreneur, an economist, a trader, author, and the founder and CEO of the Connect UK Group. Thank you for coming in and joining the Landlord Academy, Zad Siadatan.
Thanks for having me.
Okay, before we get started, there has been an article that's been released. This came out a couple of days ago. I'll read it to you and I want to get your opinion on it. Halifax and Lloyds, 2 of the UK's largest mortgage lenders, have recently announced a significant change to their mortgage lending criteria, allowing prospective homeowners to borrow up to 5.5 times their annual income. This marks an increase from the previous limit of 4.49 and will have substantial impact on first-time buyers looking to get into the housing market. Do you think this news will impact the housing market?
Absolutely. One of the reasons that the housing market has been stagnant for a little while now is because first-time buyers have been out of the market, and with any uplift or a boom in a property market, you need first-time buyers to jump in and kickstart the housing market. Now, and all the economists know that, the banks, the building societies know that, the government knows this. So for that reason, they've got to do something in order to get the first-time buyers into the market, in order to get them basically start buying property, so that the chain starts moving up the ladder. So for that reason, yes, I think this is the beginning. I personally think that the competition will get fierce, and lenders will start lending 6 times or even up to 6.5 times the joint salary in order to really get the housing market moving forward.
There'll be a competition, so to speak.
Yeah, absolutely, yeah. And this is, I reckon, this is the beginning of the next mini boom, if you like, and that's coming. That is coming, without a shadow of doubt. That's coming.
Excellent. What age did you get into the property industry?
The thing is, my folks have always been in the property industry. They've been developers. My father was a developer. My uncle was an architect. All my family have been in property. It was only natural for me to get involved in the property market. So I would say I got involved. I studied H&C and then H&D in property straight after leaving school. So at the age of I think 16, although we'll come to that later, it's in my book, I went back into education at the age of about 18, 17, 18, if I remember correctly, and that's when I started getting back involved in property market. Yeah.
So early life, you were born in Iran, moved down here at 13, but who were you in school? Who was Zad?
Okay. Basically, I actually moved to UK at the age of 12. 12 years old. I was 12 years old when I came here, and I came to study English for a period of 6 months. However, being of Persian descent, there was a war going on back in Iran, in the Middle East, so that stopped me going back home for a short period. And then obviously being so difficult to attend school because of financial reasons, I basically went to work, started working at the age of 13 in various restaurants as a washer-upper, potato peeler and so forth. And then it's only obviously latter part of I think when I was about 17 and a half or 18, it's when I've always loved studying, always loved knowledge. So I went back into college and carried on what I really wanted to do, which was the property industry. So I studied H&D, OND first, and then H&D in property studies. Yeah.
You always had a vision of becoming a businessman, so to speak?
Yeah, yes, always. Ever since I was, I think, 13. I think hard times shapes you. And ever since I was literally 13, 14, going through tough times, I made up my mind that I was going to be successful no matter what, and nothing was going to stop in my way to get there. Obviously, being born into a family that was always in property, I thought property would be apt for me to get involved, as I kind of knew some bits and pieces about it because I heard my family talk about it over dinner table.
Got it. A lot of successful people, there is a turning point.
Mm.
And they make a bit of money, and then something happens, they lose it, and then a switch changes, and then they start again and then double what they made first time round. Or, they live a comfortable life, and then a switch changes. Was there anything like that in your upbringing that made you who you are today?
Well, as I said earlier on, the first 4 or 5 years of my life, from the age of 12 to about 17, which was about 5 years, I went through tough times. When I say tough times, it was pretty tough. You couldn't get any tougher than that for a boy.
You were here on your own?
I was here by myself, yes. And obviously I worked in fish and chip shops to earn to make enough money in order to be able to rent a room somewhere, and I travelled the whole of UK. So it was pretty tough. And then as I got older and got involved in property market, I almost went bankrupt a couple of times, and that shapes you. When you make something of yourself and you financially you become okay, and all of a sudden you do something and or the circumstances happens that you almost lose everything. It shapes who you are, and you become more ambitious, you become driven, and you become self-motivator to make sure that this doesn't happen. Things like this does shape your life. There is no turning point, but every day is a turning point, so to speak. Yeah.
Those encounters and that resilience you had to have, if you didn't have those experiences, would you still be as successful as you are today, do you think?
I think if you look at every successful person around the world, they have gone through tough times. It is tough times, it is the adversities that shapes a person. It's failure that makes you successful. If you're successful from day one, eventually you will fail. But if you fail and succeed and fail and succeed, eventually you will succeed and you will keep that success. But if it was given to you, you will eventually fail and you'll never get it back because you don't know how to get it back. So it is failure and adversity that does make a person out of you. Yeah.
How long have you been in the property industry?
I got involved, as I say, I started studying at the age of 18, and I got involved. And my first job was a junior surveyor at the age of 22, I believe. That's my first experience in the property industry. Yeah. And then kind of took it from there.
So that was at surveyor. Okay, so going back to 12, 13, potato picker, you said?
Yes, I was.
And then?
I was peeling potatoes. I was washing up in restaurants. I was always in the cellar or in the back room doing remedial work in order to make a living.
Were you put? Did you go yourself, start knocking on doors, trying to get work, or did someone help you find it?
No. I just went there and I pretended to be older than I was. And I said, if they're looking for someone to wash up the dishes or peel the potatoes, I am here and I'm free. And back in the 80s, every restaurateur or a fish and chip shop or a Chinese takeaway, whoever they were, they always needed a washer-upper. So it was always supply and demand. I always work on supply and demand. There was a demand for washer-uppers and potato peelers, and I was the supply, and it kind of worked. But I wasn't spending every penny that I got. I used to put away part of my earnings in order to accumulate some wealth. That's how I learned at a very early age to accumulate put some money aside because you're going to need that in order to better yourself.
How much percent would you have put aside? Do you remember?
About 20%.
20%.
Yeah, and remember, back in the day, if I remember correctly, my memory serves me right, I earned 35 pence an hour. So I was putting away about 7 pence an hour. So you can you can imagine 10 hours a day, what got me £3.50. And £3.50 I used to put away 70 pence a day. So yes.
It's one of the hardest points at the moment for the generation coming up. They're talking about housing affordability, and one of the hardest point is the savings. So have you carried that savings all the way across? Have you always put 20% aside?
Yes, I have, and more, sometimes more. Look, whoever says saving is hard, I will say that they're not doing it right. They're not doing it right. Look, everyone and anyone can save. They can save 10-20% of their income. It's a matter of wanting to or not. You've got to give up some things in order to gain other things. There is always money that you can put away if you really want to, but you have to have a purpose as to why you're putting away. You can't just, I haven't come across anyone to put money away for the sake of putting money away. No, they put money away for a purpose. And if your reason is strong enough, if your purpose is strong enough, you will put it away. Yes.
The Secret of Timeless Wealth. That's your first book.
Yes. Yes, the first edition.
I've read it. Fantastic. Yeah. There's an art of that you explain in that book as well.
Yes. There's a secret.
There's a secret.
There's a secret whereby nobody, I've read thousands of books, and because I love reading and a lot of studying, and no book I came across that gave me the secret. I was in my, I think it was mid to late 40s when I discovered the secret of how to become successful very quickly, extremely quickly. And up until that time, I was always one step forward, one step back, one step forward. And the moment I discovered the secret, then things just took another level, and it's been going forward ever since. So obviously there's a second edition of the book that is coming out very shortly, and obviously I urge everyone and anyone to, if they want to excel in becoming successful pretty quickly, to read the book. Yes.
Excellent. So back to the property topic. You're obviously an economist, an expert. Now you've predicted 2 booms, 2 recessions.
Yes.
Is a crash coming?
Okay. Of course there's a crash coming. The question I keep being asked, is a crash coming? There's always a crash after a boom. And there's always a boom after a crash, right? Now, what people don't know and don't quite understand is that the boom and the crash in the housing market is cyclical. There's a cycle. And just as we have the winter, just as we have the summer, the spring, and the autumn months, so does property boom and crash. They go through cycles, but the cycles are not like the season, which is 3 months, 3 months, and 3 months, and 3 months. It doesn't get divided into 3 months, but they are longer cycles. They are 14 and 4, which makes 18. There are 18-year cycle whereby the boom and the bust happens. Now, where are we in that cycle? That's the question. A lot of people, I can tell you that 99%, and that's a big figure, 99% of general public do not, number one, do not understand the cycle, and number two, do not know the cycle. But if you do, then you know exactly when to get in, you know exactly what to do, and you know exactly when to get out and take a profit. People do not know that, and that's the secret when it comes to property cycle.
Do you give advice? Do a lot of people calling you up for advice on what to do? And do you advise them?
Okay, I never give any advice.
You have no advice?
I have no advice. I don't give advice because I'm not qualified to give advice. I only give my opinion. Okay. It's an opinion that I give and not an advice. So when people phone up and say, would you advise? I say, I advise absolutely nothing. But my opinion is, and I have called the last two boom and the last two recession to the month, which basically makes my opinion pretty good. Yes. Yeah. So
Would you buy in this current climate?
okay. Would I buy? The question is, are you an investor or are you a trader? That's the question. Traders and investors in property are two different. Now, a lot of people think, well, what's the difference? You buy and you sell. Yes, of course. Now, if you buy and sell in a very short period, you're a trader. But if you buy and hold for a long period and then sell, you're an investor. So which one are you? So the question you're asking me, would I buy as an investor or would I buy as a trader in this market? That's the question. So I would say, look, as a trader, it's a good time to buy because the market's still got legs to go. But as an investor, I would hold on for a little while longer, maybe another 2.5 years, or 3 years, and then invest because you will pick them up at a very good price then because the recession is coming.
Okay, so you're saying a recession's coming in 2 years, 2 to 3 years?
I would say probably around 2.5 years that we will see the height of the market. The market might yo-yo kind of up and down, but it's on the way up because of the interest rates and other factors that the government is going to throw. For instance, one of the reasons the property market is going to hot up is the interest rate. It's on its way down. That's number one. Number two, the multiples are going up. That's number two. There are other incentives that the government will be throwing at not just first-time buyers, but second-time buyers and resellers. So all of that is coming. That will fuel the market, but it can only fuel it so much that the price becomes so extensive that people can't afford it. And as I said earlier on, everything is supply and demand. Everything works on supply and demand. If there's too many supply and not enough demand, prices drop. If there are too many demand and not enough supply, prices go up. And right now, there's going to be too many demand, not enough supply. It will push prices up. Yes. As a trader, my opinion is as a trader, I keep on trading property at the moment. But as an investor, I'm holding on at the moment. A few years down the line, we'll get a better deal.
So you have this knowledge of the property market and the property cycle.
Yes.
I'd imagine it's somewhat like your Secrets to Timeless Wealth, where you found it after many hardships and endurances. When was your first sort of encounter with the property cycle? How did you come to discover it or research it?
As I said earlier on, I read a lot of books, and the cycle. I did not invent the cycle, and I did not come up with it. I read about it, and I researched it. And then I went back over since 1940 or 50. But obviously, the property cycle has been in place, from what I understand, for over 300 years. But I only went back for about 70 or 80 years, and I noticed that there was a cycle that was, that I read about is exactly true. So I get a lot of my knowledge through other people, just like this podcast that we're putting out there today. Others will listen to this, and some may get some knowledge, some may disregard that knowledge. It's the people who decide to take the knowledge and do their own research and find out whether what we're saying is correct or not. They're the ones that will go, hold on, yes, there is some mileage in this one. So that's how I came about the cycle itself, through other people, through my studies and through research. Yeah.
With your knowledge, the next recession,
Yes.
will it be as big as the last, 2007?
Yes.
Will it be on par?
I would say it could be on par, if not slightly worse than that. Yes, slightly worse. The reason is, you see, property market is very, very much correlated to the stock market. If you look at this property market and stock market, you will see that they both go down and go up at the same time. There is reasons behind that, but obviously we won't get into that right now because it's quite extensive. But just for our viewers to know that yes, there is a correlation, and property markets, people do invest. A lot of people are not traders in the property market. A lot of people are investors, and so are they in the stock market. There are also investors. So when things, obviously demand is down, things start going south, and that's when recession starts. And I believe that due to so many different factors that have been building up over the last 14, 15 years, and there is the next recession that we're going to have, it's going to be pretty harsh until we come out of it. But when we do come out of it the other end, it will be, fantastic timing to start investing.
Talking about investors, I had a landlord come in the other day, has 2 empty properties, too fearful to rent them out because of the change in the law and legislation.
Yes.
So right now there's 2 properties that are sat empty, doesn't know what to do with it, doesn't know whether to sell right now, doesn't want to put a tenant in there because of the fear of the new legislation that they're discussing. What's your opinion on that? Do you think that the law that they're talking about when it comes, about the no fault evictions ban of Section 21, will that impact landlords as much as they're making out, or will it not have much relevance to it?
Not really. Listen, as investors, as the government needs the investors to invest in property and rent them out, because the government doesn't have enough council properties in order to give to people that need it. So they need investors, and they will not do anything that will dry up the market, drive the investors out. Yes, so far there have been reasons as to why investors are not investing in property, to do with taxes and so forth. But if a tenant doesn't pay rent, you can get them out. No problem. You don't have to have Section 21. It's Section 8. You get them out. If they are nuisance to the neighbors and so forth, you can get them out. So if they are in breach of any of the clauses, you can get them out. What you can't do is that if they say, oh, my boiler is broken down, or I've got a leaking ceiling, can you fix it? And the landlord goes, no, I want you out. Now that is what they're going to stop. So
that's what they're trying to cut down on.
Yeah, so which is perfect right. If you own a property and you rent it out, it's your responsibility to make sure that it's in a safe.
You've got a duty of care to the tenants, haven't you?
Yeah.
So your average landlord, would they be more of an investor or more of a trader?
No, absolutely investors. Landlords are not traders, because the moment they become a landlord, they become investors, because tenancy agreement is either for 6 months or a year, and it go on. So a trader is a type of person that will buy the property, do what's necessary to it to make it better, and then put it on the market and sell it. That's your trader. Will not hold on to it for more than 2-3 months, and that's because he's doing work to it, and then they get rid of it. That's your trader. A landlord is an investor, and the investors are needed in order to fill the gap where the government can't do with housing. Yeah,
we're discussing about the rates, the mortgage rates. Now that will help, of course. Will they bring any more incentives to help with investors? Will they bring that back?
Well, you see, the first thing, the government right now, the Labour government, is talking about increasing the CGT.
Which to me, it sounds like they want to push them out more, because you've got until it comes in, you have other two choices.
One of the reasons that the government is trying to, and the previous government is trying to do it as well, and the current government will do it as well, is that they want institutions to come in and take over where landlords. Okay, so as far as the government is concerned, the Inland Revenue Tax Office, it's very hard to police, let's say, 20,000 landlords up and down the country, or 30,000 landlords up and down the country. But it is easier to police 5 institutions who has 20,000 units. You see, so for that reason, that's why they are trying to switch landlords with institutions. Pension companies, asset managers, companies that are very, very cash rich. They invest in commercial property. They always invest in commercial property. That's what they do. but the government wants them to start investing in residential property. So that's what they're trying to do. And that's why, in my opinion, they've been leaning on landlords and making it difficult for them.
So you're also seeing this sort of more institutions coming in. It is also being reflected in other places, such as the stock market.
Yeah, I mean, the stock market is again, is what we call blue chip companies. They are the institutions that will go in and buy big blocks of shares. The normal investor like you and me, we can only buy certain amounts. But it's the institutions can go in and sweep big amount of shares, and they're the ones that move the market up or move the market down. Their job is to make money for their client, right? So how do they make money for the client? Is the old adage, buy low, sell high. That's what they do. So in order for them to make a profit, they have to buy at a certain price and then sell it at a certain price. Now, if it gets to a point that they can't sell it anymore, what they do, they sell it, they wait for it to drop down, and then they sweep in and buy low again and push it back up again. It's been like that for hundreds of years, and it's going to be like that for hundreds of years. It's just you and I, as normal investors, don't know when that happens. They do, we don't. So, similar with the housing market as well.
Brilliant. So your book, The Secrets of Timeless Wealth, you're in the process of writing a second book.
It's the same book revised with three more chapters to it. So it's a revision of the first one. Let our listeners know as and when that's released. But we are looking at towards the end of this month.
So it's a book of your story, but also with a bit of self-help along with it.
Yeah, it's part memoir, and all self-help for people that want to succeed in life, and they just don't know how to do it, and the secret behind how to do it, how to get there in a shorter space of time. That's what the book is all about.
Okay, so you're working on any other new ventures that you've got going on at the moment?
We always got new ventures coming up. Obviously we're a group of companies from literally management side to building to auctions, property auctions. Everything is property related. To legal team, we have got basically we cover all angles of the property market. Yes, conveyancing to legal to auctions and everything else, everything in between. Yeah.
I'm intrigued to know who were your heroes growing up?
Heroes. Okay, I had two heroes, totally different end of the spectrum. One of them was Del Boy from Only Fools and Horses, because I always, as growing up, the money that I spoke about earlier on, I used to put aside. I managed to get enough to be able to buy ties, a box of 500 ties from a warehouse.
Suit ties.
Then I would then sell them from back of my car, from boot of my car, for profit. So that was Del Boy in me. Yeah. And then I also my other hero was Richard Branson, because obviously he was, he owned an airline, very successful, multi-millionaire, then billionaire now, and I always wanted to achieve what he's achieved. Whether I will or not, I don't know, but obviously I am. He's my hero, and I look up to him.
What about mentor?
Mentor, to be honest with you, my mentor was me.
Self-taught.
I am so self-motivated. Every morning I look in the mirror and I think, today I'm going to be better than yesterday, and there's no one's going to stop me. So I am such a self-motivated that I can't look at anyone and go, he's so motivating, I want to be like him. No. Although having said that, the first ever book I read was Tony Robbins. First ever book. So Tony Robbins was, I guess, the one that...
He's still going.
Tony Robbins still going. Yeah. He's the one that, when I read his book and I thought, I want to be self-motivated just like he is. So, and obviously after I've read hundreds, if not, I would say about a couple of thousand books on motivation from every author that there ever was back in the 80s and 90s. Yeah, self-motivation is the key.
Returning back to the book very quickly, obviously you have the second edition of The Secret of Timeless Wealth coming out. Do you see yourself picking up the pen and going back to authoring again?
Yes, I mean after that one, it will be about trading.
Yeah.
I am going to write a book on how the everyday person out there with a few £1,000s in their pocket can make trading work for them, and and earn a living. Of course, you have to have a lot more than a few £1,000s to earn a living, but I can teach them the principle of how to trade, and the profit that they get, they can put aside and accumulate it, and eventually be able to trade bigger and bigger. It can be done.
Yeah.
It's not, it's not as difficult as institutions and people make it out to be. So that will be the next one that I will write for just people like you and me out there that are looking to get involved in trading but don't know how.
Yeah.
Yes, that'll be a secret.
Look forward to
Trading.
reading that.
So you're how old now?
I am 57.
57. No chance of slowing down?
Absolutely not. No, I'm just beginning. I look at myself and thinking, right, I've just started. There's so much to be done. There's so much to do and so much to be done. I feel in my 20s, when it comes to energy and not only physically but mentally, I feel so ready, so young, and so energetic to go get more done. This is the beginning of a new chapter.
Do you do it in plans? Do you have a 20-year plan, 10-year plan? Do you have anything like that, or you just...
Financially, I am comfortable.
Mm-hmm.
Financially, I am secure. So I don't have the financial goals that I did when I was in my 20s and 30s and 40s. But I have other goals. How to make things easier for other people.
Mm-hmm.
For instance, the book that I write. I help a lot of investors with regard to where they should be looking at in trading or investing. I don't give advice, but I guide them, whether it's commodity, whether it's stock market, whether it's property. That's what I do.
So you're giving your knowledge down. That's where you are in your life, and you're going to continue to keep doing that.
Yeah, I think before the rest of my living days, it is all about giving my knowledge to others in order for them to succeed.
Excellent. You've got the floor. Any final thoughts? And are you on any social medias? Where can people find you?
Being an old boy, I've started with Instagram. I've got Instagram, but obviously once that book is ready in the next few weeks, social media channels will be ready as well. And then obviously we're going to be promoting the book and everything else that I do through the media channels.
Brilliant. Excellent. Well, thank you for coming on.
You're welcome. Thanks for having me.
That's all for today's episode. As always, let us know your thoughts in the comments below. If you did enjoy this video, remember to like and subscribe to the channel to see more from us in the future.